Gold has seen a bit of a pullback this week as investors take profits following the release of some good economic news that came out on Thursday. What's next for the gold market and the mining sector? We're talking today about gold with our next guest, Robert Eckford, who is the CEO of Rua Gold, a very interesting project based in New Zealand. We'll be talking about what it means to be mining in New Zealand as well, which is not a jurisdiction that a lot of people associate with gold mining. Welcome to the show, Robert.
Thanks for having me, David.
Start by talking about gold itself. So $2,400, above $2,400 what we saw earlier this week and last week, had a bit of a pullback. Do you think this is the end of the bull rally?
No, I mean, I think whenever we've seen gold consistently rise, I think you always see a bit of a pullback, a bit of profit taking. I don't see this as the end. I mean, the Fed's still printing money. We're still in election year. Geopolitics are still up in the air, and so there's no reason why this is the end. I think it's just, as you said, a pullback, and I see it continually trending upwards for the next 12 to 18 months at least.
Sorry, what do you mean the Fed's still printing money? Are you expecting them to renew QE or what
No,
do you mean
I
by
mean
that?
they're still printing money if they're living beyond their means. They're not balancing their budget. They're not able to pay down their debt, and so the fiscal uncertainty in the US is still unchecked in my view.
You're right. So the CBO, which is the Congressional Budget Office, is projecting the deficit to widen over the next decade or so. What does that mean for the gold market, though?
Well, I mean, I think we're starting to see people lose faith in the US dollar, and people now switch to gold when they want to value storage that's dependable. They see gold as that. I mean, give it 5 years ago, we had this run on crypto, and people thought Bitcoin would be the new gold, and it has its place, but it's not a value storage. It's too volatile. Whereas gold has always been there. Gold has never had these huge volatile movements. And when people lose faith in the US dollar, which historically has been a good store of wealth, has been very stable, people are starting to lose faith in that, in my view. And I think they're seeing gold as the safe haven investment at this stage.
I think you probably got asked this question a lot. Certainly, I've addressed this several times on my show, but I'm curious to get your thoughts. Why have the gold miners not caught up with the spot price over the last year?
I think there's a number of reasons. I mean, we're an industry that historically has bad capital management. I mean, you look at some of these major projects out there at the moment that we talk about an $800 million capex project suddenly ends at 1.5 billion. You've got marathons, Argonauts. I mean, it's not a well-disciplined group generally. You also see inflationary pressures, and so when you're working for a bulk commodity, you see this first, but even gold sees it. When you're low grade and you're moving 1 gram a ton material, you've got to move a lot of material to get gold out of the ground. When you start putting on inflationary pressures of fuel, of labor costs, and you put that into your cost model, any move upwards of the gold price is eaten up by your margins being fewer because your costs are going up. So one of, at least in my history, and why I'm at Rua Gold right now, and I've just come out of a company called Aris Mining, is you sort of have to, in the gold space at least, you have to aim for this high grade. And high grade means you don't have as much inflationary pressure that eats away your margins. You can move less rocks to get more gold out, and you just are a bit more protected in the industry.
Well,
So,
we're going to
short
talk
answer,
about,
sorry, David. In short answer
yeah.
to your question, the reason that gold miners haven't moved is cost pressures.
Well, let's talk about that for a minute. So we're going to get to your projects in New Zealand for in just a minute, but I want to ask you about these cost pressures because you've had a history of working for the major miners, right? You were a consultant for Yamana before then you were in finance for Barrick, so you know how these miners work. For the largest miners in the world, then, generally speaking, what are the biggest cost components? Let's break down that first for the audience.
Yeah, no, for sure. And I've also had the benefit of working both in developing world and first world, and it's very different between the two. I think the biggest cost driver that I've come out of now is labor. Labor always makes up 50% of your cost base, both just keeping the right skilled people involved, but also retraining people because you do have naturally a high turnover of staff. And I'm talking more in my history of developing world producers. You big turnover of staff. You've always got to put effort into training your staff, and then you pay your staff above average wage because working on a mine is difficult. I've been there, I've lived it. It's not a luxurious job, and so you have to attract the talent and pay a bit more, and the costs of general wages goes up every single year. In Colombia, in the company of Aris that I just came out of, we were seeing salary increases statutory by law being at least 10%.
Now, for a company like the size of Barrick, how are cost pressures usually controlled? In other words, how do you maintain fiscal discipline even when gold prices are rising?
That's a great question. And Barrick is a good example because they've got the scale to be able to do some of these more intricate strategies, such as sort of centralized supply chain. So if Barrick picked their top 8 consumables that all of their mines use, cyanide, tires, fuel, and they come up with global supply agreements, they can actually negotiate much better rates than your standalone single asset producer. And it's that scale that gives Barrick a bit of an advantage versus a single asset producer out there in the market.
Okay, so basically they have buying power because of their size.
Correct. I mean, on the flip side, and I've worked in enough big companies to say this, that whenever you're a big company, you've got people managing people, managing people, managing people, and you create a lot of bureaucracy and fat in the organization. And so that is the trade-off of size and complexity versus a nice nimble explorer slash nimble single asset producer.
Do budgeting priorities at these big companies change depending on the gold price?
Very much so. Yep. And you postpone capex, and one benefit I can say I've had is working with the likes of Neil Woodger for the last 8 years, and he's an investment banker by background. He's a chartered accountant by trade, and we started the last 2 companies together from shells and grew them into $100 million, multi-$100 million companies. And we went through a phase where gold was 1,200, and we went through a phase where gold was 2,000, and the pressures and the capital allocations look very different. You're choosing to push equipment maintenance out maybe 6 months or a year beyond what the UEMs would recommend on the basis that you just can't afford to do it at the time. Whereas in today's world at 2,300 gold, you may have a bit more flexibility. You may be able to invest a little bit more in sustaining capex and making sure your productivity runs as perfectly as possible, because having the most tons going through the mill is suddenly becomes the most important thing.
Let's talk about M&A right now in the sector. Now, you are experienced both on the junior side and on the senior side. So what is it that a senior looks for when picking a project to acquire? What are the criteria that a Barrick, for example, where you were at, is on their checklist?
So, I mean, you've got acquisition and disposition on both sides of it, and both are equally as important. A group like Barrick, they went through that merger with Randgold. They divested some of their non-core assets, and divesting non-core assets is so key to these majors. Not because they should be shedding their assets, but the cost of Barrick running a 50,000 ounce mine and all the overheads that go with it, because they've set up this quite bureaucratic process, and it's necessary when you get to that size. You need that process in place. But to run a 50,000 ounce mine, it's not worth the time. I can tell you firsthand that the amount of time that management spend managing a 50,000 ounce mine versus a 200,000 ounce mine is exactly the same. And so if you're trying to allocate your time correctly, you want to keep your core assets. So disposition is very important. At the same time, acquiring assets and seeing synergies available to you is very important. And every commentator in the industry will say consolidation is so necessary in this industry because we have mines right next to each other, all with the same asset, all with the same ore bodies that should just have one mill taking all the ore out of the ground. And we don't need multiple mills next to each other.
Well, do you agree with that? Do you think we need more consolidation?
We do, yep. And I don't see the consolidation, for instance, the most recent one, Newmont and Newcrest, that consolidation, I don't think there's as many synergies in that one from an operations point of view, as much as it's now you're the biggest gold mining company in the world. And by the way the ETFs and the funds work, they have to now buy more Newmont shares because they're a bigger piece of the pie. I think that they're playing at that level. You're playing a sort of banking game and you're trying to get indexed and you're trying to get people to buy your shares. Bringing it all the way back down to, let's call it Rua Gold level. I'm not going to buy another Explorco that's sitting in Indonesia, for instance, because there's no synergies. If I have a second gold asset in Indonesia, unless I love the asset, maybe it's good there, but there's no reason that I can now spread myself between these two jurisdictions and say it's better for the shareholders because they've invested in a New Zealand gold mining company. So there's always a time and a place. We always have M&A on our playbook. As I said, I've just done a heavy eight years with Neil Woodger, and we did maybe 7 acquisitions over that period, and a lot of them were very successful because the strategy of the company was always being played out.
Okay. Do you think we've reached peak gold, which is to say that either the maximum amount of reserves in the world have been discovered and or the maximum volume of production per year has already been reached?
I don't think so because I think what's happened in the world is the majors don't carry out exploration as effectively as an exploration company does. And so you need a constant regeneration of explorers finding reserves. Same time, the capital markets have been terrible for the last 36 months. And so explorers haven't been able to fund themselves until now. I mean, now we're seeing a turn, we're seeing people raise money. And so I don't think we've really even started the exploration curve where we're finding some big resources. I mean, Great Bear was one of the few success stories in the last 5 years, and they found a 5 million ounce deposit that Kinross bought for, off the top of my head, 1.5 billion, if I'm not mistaken.
Well, why is it that first of all, why is it that the seniors aren't as effective in exploration as the juniors, like
It's
you said?
a time management thing. I mean, there's no they've got the capital bandwidth, and exploration is very much high risk, high reward game. And investors of majors you don't buy a Newmont stock to have a potential 10x by finding the next gold producer. You look for steady dividend type income, and that's what you get from operating mines. And so the risk threshold of a major is much better to just go out and let's buy that explorer. Sure, it's gone from a startup phase of 10 million, it's now worth 200, but we know we can build that mine and turn it into a $2 billion mine. So that's our MPV growth.
Well, even the large company like Barrick, their life mine, the life shelf or the shelf life of their mines is not infinite, right? Eventually, they're going to have to replenish the reserves. What is their strategy then for the big miners? Is it to force themselves to explore more or to acquire companies like Rua Gold?
Yeah, and that's 100%. And in 9 times out of 10, the majors will just acquire an exploration company.
Okay. Let's talk about Rua Gold. That leads into our discussion about your projects. You're based in New Zealand. My first question is why?
Oh, I mean, New Zealand is very underexplored, and it's for good reason. I mean, it's been a difficult jurisdiction for the last 2 or 3 decades through environmental practices, through politics. It's been had a very much a moratorium on mining, and the politics has not been favorable to miners. A lot of misinformation out there, but still at the same time, Oceana Gold have been mining in New Zealand, and Newmont were there before, and we've had gold mines operating there for 20 years. And so there definitely is a mining history there. But if you're a startup like Rua Gold and you're sitting here a decade ago, it would have been very hard to see a pathway through to project completion. Where we sit today, it's a brand new government. They had elections last year, and in November 23, the new prime minister was sworn in. And New Zealand's in a difficult place. They're in an economic recession. They're seeing all the young people move over to Australia to work on the mines. There's no jobs for Kiwis in New Zealand. And so you're getting this aging population and all the young people leaving because there's no economic growth. They're having in a recession. There's no jobs for them. There's housing, which is expensive because they've opened up housing to foreign investment. So they're in a bit of a tough position. And so the prior party, Jacinta Ardern, she got voted out overwhelmingly. Everyone's sick of not being on the global economic landscape. And the new guy coming in is a guy called Chris Luxon, and he's not a lifetime politician. He was the CEO of Air New Zealand up until 2020, and so he's coming from a business background, much more center right, and he's putting in policies to really push economic growth in New Zealand. And there was actually a speech, a State of the Nations, on the 23rd of May today from Shane Jones, the resource minister, saying he wants to double mining exports between now and 2035. And he's between him and Chris Luxon, they've introduced a fast track bill, and they've only been in, I'll run to, they've only been in power for 6 months. They've introduced a fast track bill to make sure that permitting for mining projects can happen with a maximum of 6 months. So you're now in this new jurisdiction that is very underexplored. The gold rush back in the 1800s in New Zealand was bigger than the California gold rush. There's been a lot of gold coming out of there. And now you've got this political landscape that's very supportive. So it's a place that has huge potential.
Well, you've worked at the DRC before, and I know that maybe it's not, some would say the safest jurisdiction to work for, but we can't argue that there's a lot of good high grade mines there. Where I'm going with this is, why did you not choose perhaps some of the highest grade jurisdictions in the world, even though they may not be the safest?
No, I agree. And I'll remind your viewers, I'm just coming out of Aris Mining, and there's a really nice high grade mine in Colombia, also not the most safe jurisdiction to be in. And high grade is what I really love. I mentioned at the start, if you have high grade, you have better margin control, lower capex.
How do you define high grade in this context? How many?
I always see high grade as 6+ gram a ton. So that's the average grade being produced in the whole world right now is 1.1 grams a ton. So that's average grade. 6 times that, I'd start saying we're in the high grade. You can afford to go underground, and you're not doing big open pit mines. So that's, I really like high grade mines. I'm an accountant, so I see it as a lower risk on capex because you build a smaller plant, and you have lower risk on your opex because you move less dirt, and so you need less people, less machinery, less fuel, etc. So it's a nice place to be in this industry. Then bring it all the way back to New Zealand. I mean, like you say, why not go to the riskier places where it's high grade? New Zealand's never seen a drill hole in the areas we've been since the 1950s. It's so underexplored because it's so environmentally focused. And there's whole practices, there's processes that we'll follow. We'll make sure we're doing everything to an environmental regulation, which we need to do anyway as a Canadian listed company, whether we're in the DRC or whether we're in New Zealand. We're always going to follow first world environmental practices. So we're going to do things in the right way, but because it's all, and the region we're in the South Island has this history of mining there up until the 50s. They mined 2 million ounces of gold at 25 grams a ton. It's insane grades down there. And it's the first world, and we'll do everything in the environmentally sustainable way because it's such high grade. We can afford to do things underground, and your footprint is way smaller.
So what are some of the major differences in mining, and let's say we're exploring rather, in a place like New Zealand versus Australia, which is not too far away, but widely considered a more recognizable jurisdiction for mining?
Sure. I mean, Australia has been historically a very friendly place to do mining. If you ever look at something like a Fraser Index, and Fraser Index, for anyone that doesn't know, is a list that comes out annually of geographies around the world, and it ranks them 1 to 100 of where they sit in mining attractiveness. New Zealand's had a huge uplift. Australia's always been in the top 10. And because of that, it's been heavily explored. New Zealand's always been at the back end of that list, and it's worked its way up from the back end. It's right smack bang in the middle now. So it's had a huge improvement, but it's so underexplored. And so the reason we're in New Zealand is because no one else has been there before, and we see a real need for putting a drill bit in there. I mean, David, you've been at this for a while now, and you would have seen in your time a number of assets that have been recycled and rebranded and brought to the market again. It's not the case for Rua Gold. We've got brand new assets that have huge potential that haven't been explored yet.
New Zealand sounds exciting and all, but your investors might be wondering if you're expanding anytime soon. Would you consider exploration in another jurisdiction? Suppose you had the funding to do so?
Yeah, I mean, as I said, I'm not adverse to M&A. I really see M&A as necessary for all stages of mining. But right now, our current strategy is a New Zealand roll-up story. And so if there's opportunities in New Zealand, we really see New Zealand as the place to be. There's a lot of opportunity in New Zealand. And so if there's M&A more closer to home, and that's where we actually see synergies because we'll have one operating team in the country, we won't be spreading ourselves between jurisdictions, then we'll definitely be open to that.
What's your long-term end game here, if you have one? Are you planning to go into production?
100%. And one thing I'll urge your viewers to look at is if you look at our investor presentation and you look at the overview of Reefton, you've got three companies in that gold district. You've got us, you've got an ASX listed company called Siren, and most importantly, you've got this small dot in the middle called Federation. It's a private Australian company. They've got a small land package. They've got 700,000 ounces inferred resource at 23 grams a ton. So nice high grade, exactly where we want to be. They've raised 225 million Australian dollars, and they're partway through developing that mine. And they're private, all raised by one major shareholder, Australian Superannuation Fund. And so, is there a world where the whole consolidation of the region happens? It makes sense. Is there a world where we build our own mill and we have a couple of mills in the area? The economics will just definitely justify it. So, short answer to your question, it's too early to say. We'll definitely be looking to grow this. The board behind this team is a group of mine builders. We're talking about Oliver Lennox King, who built Frontier Gold, who built Rocks Gold. His COO, Paul Criddle, is on the board as well as his right-hand man. Huge amount of operations experience. He's built mines, he's run mines. This isn't your normal explore co. Let's drill a few holes, prove it out, and sell it. This is a team of people that have all built major companies before.
How are you finding financing in today's environment? 2,400 gold I mentioned earlier. Are you seeing a difference in sentiment from investors versus just a few months ago?
Yeah, it's definitely improved. I must say I've had the advantage of working on really good projects that have always found financing. This not being a difference. I mean, this one we raised $7.5 million when we came out of the gates in a very difficult gold market. We're seeing some really good results as we come out to market and we continue marketing and we're continually releasing exploration updates and drill results. And we see a lot of interest in the stock. And so I don't foresee difficulty, not just because of the gold tape, but I think because of the assets and the management team. You're always going to get players out there that struggle to raise money because, as I said, it's recycled assets. It's something that no one believes in and that they've been peddling it for too long. So I think that's just comes with the market.
Okay. Well, what's next for Rua Gold? What's your short-term to intermediate-term goal and next steps?
So this year, it's with the two projects, North Island, we've got permitting underway. We just got that project last October. We just started exploration as of this week, and we expect to be drilling there by the end of the year. So it's really a permitting story and early exploration play. In the South Island and Reefton, that's where we actually started this company privately 4 years ago. We've raised $8 million privately, and we've spent that all in proving concept. And now we have drills turning down there. So for the whole year of 2024, we'll make sure we have drill results coming to the market, and we expect they'll be favorable, and we expect the share price to react.
Excellent. Well, thank you very much for your time today. Where can we learn more about Rua Gold?
Ruagold.com.
Okay, we'll put the link down in the description below, so make sure to follow that link. Thank you very much again, and we'll speak soon. Take care.
Thanks for having me, David.
Thank you for watching. Don't forget to like and subscribe.